Busy week. Let's get right to it. Go through the market. It's amazing how much can happen, especially over a 2 week period with DeepSeek and tariffs at the beginning of the week and the end of the week. So we'll go through all of that, including the tariffs. DOGE is making waves, and I think it has to be focused on. It's not getting enough attention in my mind outside of the media. I mean, in the markets, I think this is becoming a bigger story. Do an update on DeepSeek, another big acceleration for AI, and an altcoin crash. So we've got the crypto market basically in some form of a crash this week. I'll go through it at the end and talk about a bunch of different things that some other indicators just to look at. So just to start out with all the news and everything going on, the S&P is still up about 2% for the year. These are monthly numbers. I just want to highlight that there's a lot going on from Trump, and as of now, with Nvidia last week gapping lower on Monday, and then the tariffs, everything gapping lower this Monday. The S&P is down 24 basis points for the month. And it's being led lower by the Magnificent Seven. So this theme that I've been talking about really since June, July, starting in write-ups that I had done, and then once I started the videos just talking about it, that I think we're kind of at the peak of acceleration, and I think best case scenario is these things become market performers. Well, right now they're underperforming the S&P, by a decent amount, and so far this month they're down 2.8%, making it the worst month at this stage back to 2023. And just to highlight, I included Broadcom for the Magnificent Eight, and you can just see that all of them are down for the year except for Amazon, which had reported earnings, and it's up 4% for the year. And then you've got Meta, which is up 22%, but the rest of them are all down, between 3 and 11%. So definitely a change that's gone on. With all the tariffs, not just what was announced with Mexico and Canada and eventually, delayed for a month, but then you also got and we're getting a pattern here, expected every, afternoon on Friday, but we got another threat of tariffs. And the dollar is still, been weak so far. After a little rise earlier in the year, you went lower and you really closed near the lows of the week. And you've got a MACD weekly sell signal, which is very close. So I think this is going to be an important week because we set up another week of tariffs, and this one was broader and just saying anyone that needs to be dealt with in a reciprocal manner. 10-year rates, same thing. Think about how many people were out before Trump. We've had basically exactly what you'd expect, stronger data. The surveys have all jumped higher. The ISM was higher. And rates have moved lower, and not a small amount in my opinion. I think even though some of this will be the unwind in the trade, I do believe that DOGE is going to have an impact on the way people view rates and the way they view everything this year. I actually think based on the progress that's already been made and how much Washington is up in arms after this week, this is just going to accelerate, because I think the only reason people get upset is because there's obviously a lot of fraud, and I think this has been proven the other two times in the history of the country where we've gone and done this. So I think DOGE were probably underestimated by the markets. It's a positive sign long term. I would just, I think this is going to have an impact, and we are close to a MAC sell signal on 10-year rates as well here. Junk spreads haven't budged, so again, I'm not going to spend time. As the tariffs come out, you've got rates moving lower, you have the dollar actually weakening, and you have junk spreads not moving, and the S&P was near the all-time highs as of when he announced more tariffs. And all of this reminds me of 2018. 2018 was a bad year for the stock market, but instead of focusing where it finished the year, I've talked about this before, it had been kind of bouncing around all year, grinding higher, lots of volatility, and that was the tariff year. It was mainly focused against China, but there were also tariffs across different countries and different products. The sentiment, the AI is, this is the back to January of 24. We went down here, bounced back up, came back down. No matter how you say it, sentiment's been eased from where it was. But the structural side of the economy is Great. Sales growth, now we've got 60% of the companies reported. We've got earnings growth of close to 13%. This is the 13% number, and you've got sales growth there. So there's just no way to get around the fact that we have earnings that are doing well. And remember, there's a very high correlation between earnings growth and the PMI. And we just got the new orders for the PMI jumping up to the highest level since 22. I've talked about this for a while now before Trump took over as to we would start to see it. We got a 55 reading on it. So the PMI's stronger, and this is not just 1 month. This is the monthly move. So we've now had 5 months in a row. That hadn't occurred at any time since 2020. You're getting strength in the PMI components, and all the leading indicators suggest more is to come on the headline PMI. So this is new orders, less inventory, which hit its highest level since the middle of 21. And if you go back, I mean, this is a very strong reading in terms of new orders versus inventories. And again, I think this is real. I think some of this has to do with Trump unleashing deregulation and people thinking further ahead. I think some of this has to do with the massive data center build out. I showed last week or 2 weeks ago the size of the data center that Meta was building. You have to add in the Stargate number, the massive numbers of which even after DeepSeek have not changed. So this is another indicator that says it's happening. This is the diffusion index within payrolls for manufacturing. So we jumped up to 57. So people are hiring with inside manufacturing, and whether it's build baby build for oil, whether it's build baby build for AI data centers, I don't care what it is. There's a renaissance going on right now in terms of building stuff, and that's going to have implications for commodities. You've seen copper move higher. I'm not going to go through that this week. Just extending this is just bringing it for small, medium, and large enterprises from Ed Yardeni. No way to get around it. The economy is seeing an uptick in the building, and then you have to remember we've got the disasters from LA. We have the recoveries and a lot of the hurricane stuff that are going on. There's just a lot of building that's ended up happening, and I'm not going to even talk about the fact that we've seen some sort of a resurgence in China to some degree, despite the media still remaining negative on China. I'll show some charts on that a little bit later. Payroll numbers, the aggregate payrolls numbers, they're still weak. They're good, but in general, I would say that these numbers, and I've shown this, they're just not as strong, and I think people are missing some of the boat on this. The payroll numbers are showing the impact of AI. I will keep saying that. I think it's going to become more of a theme this year. I think it has huge implications for the way that the administration is going to deal with things, particularly with regards to the stock market. But this is another way to look at it. So the temp numbers came out. The temp numbers are the orange line. Still, we're not seeing any temp hiring going on. The white line here is the quits rate for JOLTS. Still seeing people who are reluctant to quit their jobs. And then we got another one here, which is released by the New York Fed. This is consumers' expectations of being able to find a job going forward. This is not people out of work. This is just the expectations. It's getting harder and harder for people in the labor market, and I think this is going to become, like I said, an AI theme. I just want to kind of go through the tariffs here. I thought this was a great headline from ISI. Trump tariffs could dent U.S. growth and drive up inflation. We're just at the point now where people, I think, are going nuts on the tariffs thing. I think we have to deal with the fact that this is something that he believes in. I would not underestimate, just because of the Canada-Mexico thing, that this isn't going to continue. I actually think there's a lot more to this. He announced this on Friday at around 2 o'clock. So in the same way that he kind of did this before Canada-Mexico, I do think a lot of this is negotiation, but I think some of these are going to stick. And so you can see how the S&P traded. We had the DeepSeek thing where over the weekend it gapped lower, and then it traded lower as people got more panicky. Then you had the tariff announcements or stuff for Canada and Mexico, which came out at about 11, 12 o'clock on the prior Friday, and we sell off, and then we gap lower on the actual one. And then on this Friday, similar thing. We go through the next tariff announcement in terms of reciprocal tariff. So I think we just have to get used to this as part of it. I'm going to focus more on the fact that in the end, this is not going to be anything big, but I think from a trading perspective, it's definitely getting rid of people being comfortable going home on the weekend. So I think we just have to live with this, because I think there's going to be more of this type of stuff. He reversed the Canada-Mexico thing very, very quickly once he got what he wanted. I think you'll see Europe at least talk, but we'll see where this goes. In the end, though, I don't think it's going to matter for the structural part of the economy. And the reason is, I just want to make sure when you hear this stuff, and you're going to get a lot of the media stuff because the media is controlled by the other political party, as we're finding out with some of the USAID stuff. And I think you're just going to see a lot of negativity on tariffs that are going to scare people. But the end result is we just don't have tariffs that matter in any kind of big form. They're just not a big part. I make jokes all the time about how this, if you really wanted to hurt other countries, you'd shut off Google. This just shows the federal revenue. He's not going to get enough money to get rid of the problem we have. But any amount that's fair, where we don't have to spend more money, he ran on this. And I think that's the issue that people are just going to have to deal with. And this isn't Smoot-Hawley. And again, I've made jokes about this, but we're at a completely different situation. And the tariff rates are right now at low levels, so wouldn't be surprising to see them go higher. And if you want to go read an article or listen to a podcast, just go listen to Stephen Mirren. I think he does a good job of kind of explaining what's going on, or what he's been talking to Trump about from inside the White House and even before the election, about why the tariffs can work, and how as long as the dollar is not too strong, but it's strong, everything will be work out in the end. My opinion, this is from Luke Grahman, an old report he did that was on the internet that I think lays out why this can't be too much. For all the revenue increase you get from tariffs, if the stock market falls, there's a bigger problem in the U.S. because at this point, this is from 2015, a surprisingly large number of U.S. income tax receipts tied to U.S. stock prices. And specifically, this goes through preventing a default by the state of California. And California is kind of, as he highlights, a microcosm for the U.S. And this is a point that Luke Grahman makes all the time. If you listen to one of his podcasts, we can sit there and talk a good tariff game. And I think the reason we do these on Fridays is so that the stock market can have its fall. People can get a little bit used to it over the weekend. But I just don't think you can allow this to become anything bigger. So I think there's going to be bids underneath. I don't think people are going to believe that this is going to turn into some bigger thing. I do think there's a reasonable chance, based on the people that I read, of some kind of a positive tariff announcement eventually this year from China. I think there's going to be a lot of negotiation in the beginning part of the year. I think this is real. But I think when you go through this stuff and just realize that, what helped California and just thinking about these numbers, it is a microcosm of the United States, and this was something that was in there. If sent around in video were changed quickly, obviously it did, we could see a pretty significant reversal in the revenue gains that we've had over the last year or so. So don't underestimate how much the stock market is necessary to at least be not falling. But if you want revenues, and I think they are focused on getting the deficit down, they can't afford for the revenue side to be going down while they're cutting expenses. So just keep it in your mind that you can't really go through this, especially when you're making tax cuts. I thought this statement from J.D. Vance, and I think for everyone who doesn't, most of the stuff that he's doing at this point, again, he was elected on this, and so whether it's DOGE or whether it's tariffs, all of this stuff that's happening in such a short amount of time is part of it. And if you want to look at the government as we kind of go into the DOGE thing, because this was a headline this week, Marco Papich put this out just showing this is net support for his executive orders. All of the government ones are the strongest. So it is a absolute political issue that people think the government is overspending and needs to be in check. And so now you have Elon Musk and DOGE going through this. You're getting more stories on this. It's going to affect both Democrats and Republicans and all of this, but you're going to hear the Democrats cry the most this week, calling it a second American Revolution. Elon Musk, Naval Ravikant, one of my favorite people, calling it second American Revolution. Even House Democrats, I don't contest DOGE will likely find awful examples of wasteful spending. Well, that's the whole point. And for those of you to know, he did a Twitter space on this, or an X space, You can go listen to it. It was, I think, midnight when he did it. And we're now at $67 billion, $68 billion and counting. This was through Friday. So I think this is going to remain something that's going to be in there, and I think it's going to have an impact. And I'm actually getting more and more comfortable that we are going to reduce spending by more than what's there. And the reason is because this is a political issue, and the more you fight it, I think this week was an example. I think a lot of stuff is going to come out, and I don't think it's good for politicians to be arguing about it at this point. I think this is being done in a way that's going to really expose a lot of spending that was done, and we're going to fix probably more than people had anticipated, at least before the beginning of the year. So if you were betting against rates, I just don't think when all the spending numbers are coming up and the aggressiveness on it, that it makes a lot of sense. DeepSeek, just an update, still moving powerfully, and it's globally. Just as you go through this, and I'm just going to kind of fly through the DeepSeek, hits 20 million daily active users, reaching 40% of ChatGPT's base. Stories across the globe. If you go into Brazil, if you go into Indonesia, if you go into Nigeria, having an impact already there. Massive global use. And again, if you've done any more, if you've listened to the podcast, I've pointed out, this means inference usage is going up dramatically. If you haven't used any of the inference things, go to Perplexity, try it out over there. You're going to see how much more GPUs it uses. I think it's pretty clear after listening to many podcasts on this, including one I wrote a Substack about it. If you want it, it's a 5-hour one by Lex Fridman. Fantastic, goes through it, but there's no way this is less GPU. There's no way this is less power. It's fairly obvious. So I fully expect that NVIDIA is going to continue to have a bid underneath, whether or not it goes back up to the highs before the earnings. But I think the earnings will become important. But this is just showing the importance this is having around the globe. I've talked about it as a disruptive event for the Mag 7, and I fully believe that. So all of the Mag 7, I think their future multiples have come down. This is just showing where it is right now in terms of how fast the rise has been relative to other open source models. They ran into problems. So this gets back into the fact that DeepSeek actually needs more GPUs to be able to run, which is just ironic because they got too many people coming in. So the demand stuff outstretched the supply. It has had an impact on China. So this has been a big positive for Asian tech, and in particular China tech. So I just want to highlight, because you had this massive run up in September on government stimulus. The stimulus has continued, sentiment has dropped off, and we closed basically right back at the highs of where we are in September. This is a massively bullish chart. I fully expect that the DeepSeek thing plus the stimulus is a major catalyst for Hong Kong tech to start to revalue. So you can play that if you want through CQQQ. Very similar chart. You've got MACD buy signals, but the China story is real. I think that has positive implications for the U.S. market in general and U.S. GDP, just because we're getting some positive on China. In terms of the inference thing, I just want to make sure, if you guys haven't done it, I did write a Substack on chain of thought reasoning, inference, same thing. Just a reminder, this was an interview from October. This is with Brad Gerstner, part of the BG2 podcast. They had another great podcast this week. In this interview, he talks about how important inference is and that it's about to go up by 1 billion times. Over 40% of NVIDIA's revenue is inference today. That was back then. But because of chain of reasoning models, okay, this is the 01, but now we've got DeepSeek, it's about to go up 1 billion times. So when people focus on the fact that there was a cheaper way to do it, which has also kind of been put down, but a more efficient, they're just not dealing with the fact that between the data center build-out and the inference needs go even massively bigger, and the 1 billion times is about robotics. So if you want to go read something on it, I just went through why it's so important to robots. In terms of the hyperscalers, everyone increased basically except for Microsoft. So the numbers are staggering. You're dealing with a massive move, and remember, this does not include Starlink. So this is just the total GDP growth this year. If it's 5% nominal, that's about 1.5 trillion. Well, right here, here's 20% of that. That doesn't include Starlink, whatever you want to do. This is purely from the AI build out. It's a massive number. Hugging Face became the biggest AI app store. This is important for this year. You're going to have generative AI apps coming out, and by the end of the year, I'm sure you're going to have one on the iPhones as well. So agents and everything are going to keep going. Aaron Levy from, I think it's Box or Dropbox, can't remember, sorry, Aaron. Here's DeepSeek. Remember we were talking about how good everything was? Okay, look where we've accelerated. This just continues to go. So DeepSeek came out, now you've got everything accelerating. So he's just highlighting how fast the curve is in terms of how they're blowing away each other on benchmarks. AI's in earning calls. AI's just accelerating, guys. Power is going to be needed. I'm going to keep harping on this. Oil has come back down. Nat gas had a little bit of a pullback, but we are going to need power for this. The amount of, just use it again, use Jensen Huang, 1 billion times in terms of the inference increase. That's going to go on, and the hyperscalers just announced bigger spend. Everyone was worried last week whether they were going to cancel spend. I saw people saying, I wonder if they're going to cancel their capex spend. Well, when you increase it that dramatically, and you have Starlink, I just don't know why people are still not focused on it. So I'm sure NVIDIA not only is going to be fine, we're in a different stage where semis seem to be used as a source of funds for software. That could continue for some time, but I would again be watching NVIDIA and seeing how it's traded. Traded very well on Friday. I'm going to start bringing this up more because, again, this is the job situation and the AI's impact on income inequality. I think a lot of what the White House is going to be focused on, especially from the election side, inflation may have been the cause for people to be upset, but I think AI is going to continue to make this look worse. So again, this is the rise of basically software, and this is our corporate profit margins. So, we're dealing with profit margins that have just continued to go higher at a much faster pace than what's happening for compensation for employees. And I think this differential leads into crypto. And I've talked about this before. People want their costs brought down. Most of, I would say, the harshest costs are inside the financial industry in terms of the margins. And I think what we got this week for digital assets was the beginning of, again, what Trump ran on. You had all of the important administration heads at a press conference. Everyone in crypto still seems to want a strategic Bitcoin reserve to be announced, which I just don't see ever being announced. If they were going to do it, I think they would just start accumulating, and I wouldn't see why you'd announce something you're going to buy ahead of time. The CFTC announced a forum to launch digital asset pilot. So we're still getting the process in place. So the structural undertone of crypto remains the same, but you see Bitcoin's been consolidating here. We've kind of gone down and had a little sell signal. You had the election gap up from the 65 to 70,000. We broke out, and we've been consolidating now between 90 and 107 for a period of time. But under the hood, this green line here is what went on this week in Ethereum. You've got the altcoin index, which is here. You can take it back. Basically, altcoins and Ethereum are unchanged now since 2023. Solana came down hard, and Bitcoin has outperformed significantly, but you did have effectively a crash to some degree this week. You can see how much the 7-day change was. Bitcoin was down 7%. You have a lot of, and this is done by market cap, so think of this as, these are big names. Ethereum down 20%, Ripple down 20%. You've got everything down in the 15 to 20% area. And even Fartcoin's down 90% now. You've got the Trump coin, which caused a lot of the problems. If you go look when everything started, the day before the inauguration, which was a disappointment in the strategic Bitcoin reserve, and you had the Trump coin. I think that's when we started to see the unwind of a lot of the meme coins. Ether volatility, this is what happened in Asia overnight on Sunday. Just clearly a lot of forced selling that was going on from people that had bought in. When we got open, this is the 2-hour volume. This is for Ethereum since the launch. or I'm sorry, over the last 120 trading days, look how big this is. So we had a panic puke selling. Now, if these were stocks, and maybe this will hold in that way, this is the kind of thing you want to see as full-blown capitulation. So we'll see how next week trades. As long as the tariffs are in, I think it creates an issue for the entire crypto market. But when you have this kind of stuff, potential weekend crash and Monday dump in altcoin market, this is when you know you've kind of hit the point where the sentiment greed index is a good one. This is from coin market, I guess. 35, this is kind of where it was before. We've really taken off a lot of what's gone on, and Bitcoin, the gray line here, is still sitting there. So you've got the volume down here. I think overall things kind of held in there well, and if you look at Bitcoin, you can't even tell on this day. It wasn't even close to what Ethereum had. So Bitcoin has held in there, and I think there's structural demand for that. I will keep saying I don't believe in this stuff. This stuff here is the altcoin market. As I do these podcasts, I'm never going to spend the time going through these and betting on one versus the other. I've made my point here. AI is accelerating so fast that innovation is going to eat other innovation very quickly. This is the total market cap of crypto. So look at the total market cap having got up to, this is the grayscale one on it. It's not, it looks like it's slightly different than there, but the point is the same. And the reason I want to speak about this did happen once before in our time. This is the internet bubble. So this is the internet bubble, this is the unwind, this is the Nasdaq composite. And you can see how long it took for this to ever go back up to where it was. And at the same time, you can see how fast the S&P did. So this is like Bitcoin versus the altcoin. I am a Bitcoin maxi. I just believe this is what this is, and that Bitcoin and the market cap represents the innovation and the growth in crypto. And you can have success picking some of the altcoins, but their time period will be a lot less than the US in terms of how long things are going to be able to have a competitive advantage. So I think we're getting close to something in crypto here. I think we need to get through the tariffs. Once the tariff situation, we get more clarity on it. And this is not just for Europe. I think China's the big one. This could take weeks, not days. But regardless, we've definitely hit a panic point. That's it for me this week. I'll see you guys next week.